minor children, married persons, in community of property and also out of community of property. And we've even looked at a divorced person. And guys, I think the one thing that I didn't discuss with you is that there were a court case, I think 2 years ago, and in 2019, the Accounting Society and myself, we visited the University of Johannesburg, and we've attended some of the classes there at UJ. And when we went to the tax class, there was a hot court case during that time, and this specifically, intrigued me. And basically, the court case was about family matters. And guys, what was found in that court case is that even if you are not married, remember, some people prefer not to get married. And I'm not talking about a commitment ceremony now. I'm talking about you guys just living together, but you actually live together as if you are married. And that court case basically found that even if you are not married, but there are factors that can contribute or that actually look like you guys are married. Let's say we are a couple, but we live together. We buy assets together. We do everything together. You guys know what I'm talking about. Then SARS actually found that those people are deemed, and I put it in inverted commas, to be married for tax purposes. So even their passive income and all of that have to be looked at. So you see, even if you are not married, sometimes the courts can actually deem you married. And the reason for this was, guys, because they've lived together for so many years and they've done all things, that married people do. They've invested in properties together and things like that. So what I'm trying to say is this whole in community of property and out of community of property and married persons, it can get actually tricky. So be careful. Even if you just stay with someone, the courts might find that, or for tax purposes, that you are actually married to that person. That's not the term they use, but for tax purposes, basically the bottom line is that you can be considered married to that person just for staying with that person. Now, guys, we've looked at uniform allowance. I don't want to spend time on that again due to our limited time. We've looked at relocation benefits. I told you guys a lot about relocation benefits. And guys, it's important that you always look at what is included in the relocation benefits and what are the conditions. And the same way for the uniform allowance. We know that there are two requirements that both of them should be met before you can actually have the exemption as a natural person. Now, today we have to start with crew or ship's crew. Now, guys, I have friends that work on, on these cruise ships, basically, and it's actually one of the popular ways to make money. I even have a medical doctor friend that was with me at school, and she's currently a medical doctor on this cruise ship. So basically, people that just travel and on sea, with a boat cruise. And now we will look at the people, the crew, the employees of that ship. So basically, for ship's crew, in order for you to get any exemptions, you need to be an officer or a crew member. So guys, basically you need to be employed by that cruise ship. So basically the tourists, this is not applicable to the tourists. This is applicable to the employees of that ship. So if you are an officer or a crew member on a ship, and then very important, guys, it should be international transport. So guys, what am I trying to say? You traveling on a ship from to Bay, not international, or you traveling in South Africa from Cape Town to Port Elizabeth or to Durban, that is not international travel. It should be international travel. It should be out of the country. So guys, it should be international transport of goods or passengers, and people should pay for that international transport. So you should have clients paying for that cruise ship. Then, only then, if all of this is applicable, then your remuneration, the remuneration that the employees get, their salaries that they get, the full amount will be exempted if such a person was outside of South Africa for more than 183 days. Now, let me put this in a scenario. So let's say I'm a crew member, I work as a waiter on a ship. And guys, there are many people that do that. Even you should consider this. You guys are still young. You don't have to start working as an accountant when you graduate. Some people literally just go on a boat cruise for 1 year or 6 months or something like that. And then they just work, they do any other work. Maybe you clean toilets or whatever, because you learn so much about yourself. And guys, you need to put away your ego. Don't say I'm an accountant, and because there are really people that explore this. There are people that explore this because you meet so many different people. Guys, those cruise ships are amazing. There are actually events, there are artists performing. It's like a hotel on water. It's a moving hotel, and a lot of people do this. I'm sure some of you know people who've done a cruise ship. And also, if you have money, 3 years from now, you can always start small. What a lot of people do is they go to Durban, because there's this boat coming from Durban to Walfish Bay. So you get on the boat, and then you will be on the water for a few days, and then you come board at Walfish Bay. I know that one is not expensive, maybe 10 to 15,000. And guys, it's really a holiday on water. But anyway, so what I wanted to say is, so if you are out of the country, let's say our boat is now leaving Durban, and we will be away, let's say, to the Cayman Island, to USA. Let's say we travel the whole, waters of this earth, and we are outside of South Africa for more than 183 days. Then we say the salary that we get paid is will be exempted. So if I get 50,000 salary and I've been outside of South Africa for 183 days in a year of assessment, the full salary will be exempted. The full salary will be exempted. Now, guys, just for interesting sake, I think I might have mentioned this to you last year. The friend that I just told you about, that is a medical doctor, I went to the airport, found her there. We were chatting, and then as we board the aeroplane, she told me that we should have coffee when we get to Cape Town. When we got there, I thought it's just someone that is excited to see me, because that's really what it looked like. Yeah, that's these ladies, right? When we got there, we went for coffee, and then she told me that I actually want tax advice, because I'm about to board a cruise ship, and I want to know, will my salary be taxable? Will I have to pay tax? And obviously, this is the slide that I've discussed with her. Eventually, I gave her the advice, and eventually she gave me 500 Rand at the airport. So guys, you need to be ready anytime, every time. Remember that I've actually given her my time and my advice and my skills. And I didn't want to take the money, but she insisted, because I've delivered the service. So you guys need to be ready every time, anytime, to give advice and make it, because we didn't study this for nothing. But anyway, so guys, this is the slide I'm talking about. So I basically told her that if you're gonna be away, because how it worked in her case is that they will be on the water for 3 months on a cruise ship, and then they will come back to South Africa and stay at home for 1 month. Now, in her case, basically, she will be at on land in South Africa for 93 days. Why am I saying 93 days? Since it's going to be 3 1 months, right? So 3 1 months multiplied by 30 days or so. So if you deduct that from 365, then she will only be away, or she will be away for 175 days, right? And that is more than the 183 days, which means her salary will be exempted. Guys, that is one way how people make money, especially if you want to make money. And very often these cruise ships pay in other currencies. They might not pay you in rands, Colombian dollar, they might pay you in US. And imagine if you don't pay tax. Imagine if you don't pay tax because you have been away for more than 183 days. Now, guys, that was a mouthful. I just wanted to give you background of how these things actually work. Now, very important, guys. Let me give you another example, a scenario. In the test, I might say, Mr. X is very rich and he has his own yacht and he invited his friends and you are one of his friends and you guys are going on a holiday. And while you are on this, on this whole holiday, you started working, serving drinks to the rest of the people there. And Mr. X thought, no, let me pay you a little salary since you are actually now working. And now I'm going to ask you, will that salary be exempted? Now, guys, what is one of the conditions that was not met here? That is that I actually didn't go on that ship for a fee. Remember that it's more a leisure, tour. Initially, it was friends having fun. So basically, this thing was not met. All the others might have been met. And I'm also not a crew member. No? Remember, I didn't go there as a crew member. I went there as a friend on my friend's yacht, having a holiday. The fact that I only got paid, later for serving drinks or something like that, that means my salary, the money that I received, will not be exempted because I'm not a crew member. Yes, it might be on a ship. Yes, we might be out of South Africa. And I also don't have an employment contract. So the initial idea was not for me to get money. So now, since I'm a resident of South Africa, I need to pay tax on my worldwide income, which means in that scenario, the remuneration will not be exempted, even if I am out of the country for more than 183 days. Now, guys, in Namibia, I'm sure you guys have heard about maritime, even South Africa and us who have a sea. For us who have an ocean, that is actually called our maritime. It belongs to the Atlantic Ocean. This side of Namibia actually belong, or it is considered to actually be owned by Namibia. And as you go to Cape Town, that part now, that is the waters of South Africa. So that is why we actually have rights to that water. And we actually call it maritime. Now, guys, I'm sure you think that is insane. How can someone own a sea? But I'm sure you guys have heard that recently, I think there was this of fishing without following the procedures. And our government basically reprimanded them. Why? Because it is our maritime. It is our waters. It belongs to us. That is what we actually say now. Those countries without a sea, obviously, they don't have a maritime. And guys, our maritime is basically one of our biggest assets because we have the fish that comes from there and also the boats that actually board at Wildfish Bay. But that is enough on ships and cruise. Is there, if you have any questions, you can ask. Yes, is there a question?
Yes, sir.
Silaf? Yes, go ahead.
Yeah, just asking regarding the example that you use right now. Let's say when a person left, of course, he didn't have any working contract. And let's say after maybe 60 days, he got a working contract. How will that be considered, that scenario?
So yes, Silas, that's a good example. So obviously we always need to, guys, text looks simple, but it's never simple. It's very complex. Why? Because we always have to look at all the facts, even if you sometimes think that this is irrelevant. I'm telling you, when you come to a tax attorney or to a tax expert, the smallest little thing might have an impact on that transaction. So your question is, let's say I didn't leave as a ship crew member, but while I'm there, I got a contract, let's say 60 days or whatever. But in that case, Silas, it will still not be exempted. Why will it still not be exempted? Because the nature of that scenario that I gave you, why did we actually go? I almost want to say we didn't go as a trading company to start with. Remember, it was friends going on holiday. Initially it changed, and you see there's a change of, it seems like now there's a change of intention, isn't it? Because now I didn't go as an employee, but now I have an employee contract, after 60 days or whatever. But then we need to look at all the other factors. And the one thing that you need to remember is this is not, the people on board does not pay to be on board. Ne? The guests or the friends that is there, they do not pay. And that is why I'm saying you need to look at everything. And in that case, even if I have a contract, my salary will still not be exempted because all of these criteria have not been met. Why am I saying that? Because the people on board does not pay a fee. Guys, it's they sort out everything on your behalf, and you just get into the aeroplane and go have a holiday, whatever. Now, in that case, if it's a travel agency, I've paid a fee. But in this case, remember, it was friends, just friends coming together because we had this rich friend, and maybe you will be that rich friend one day, Silas. Not maybe, you will be, you can be. And then you invite all of us. Don't forget about text. Then you invite all of us to go onto that yacht. But the bottom line is, Silas, these people didn't pay a fee, so it will still not be exempted. Are you happy?
Okay, sir. Thank you.
All right. So we need to look at all the facts, at all the factors. All right. Let's look at bursaries. Now, guys, I've touched on bursaries here on Tuesday. Now, guys, bursaries will be exempted. Guys, what you need to understand is obviously the salary that I get must first be included in gross income. I need to reiterate this, that you can only exempt an amount if it was included in gross income. Guys, there are too many people that make this mistake where you tell me that an amount is exempted, but then you don't include it in gross income. Guys, the condition for an amount to be exempted is that it should have been included in gross income. So guys, for the bursary, obviously the amount, you will include it in gross income. And now we look at, will there be any exemption available? So we say bursaries will be exempted if it is a bursary to a, or if it's a bona fide scholarship or bursary. Now, guys, I've explained bona fide there for you. Basically, just it means it's real, it's genuine, without intention to deceive, and that's just a Google answer. So basically, guys, it must be a real scholarship, not these lie things where someone have hidden agendas and things like that. So it should meet all the criteria for it to be a scholarship or a bursary. Now, if it's granted to enable or assist a person to study at a recognized educational or research institution. So guys, these are all the criteria. It should be a recognized educational institution. Now, guys, I'm sure you guys know that there are some institutions in Namibia, and I'm not going to mention the names, that are not recognized. They are not recognized. And normally at the beginning of the year, when grade 12s get their results, you see these universities popping out left, right, center, and many of them are not recognized. Now, guys, NUST is a recognized university, including UNAM, IUM, and those ones. So it's very important that you study. And some of you, when you are done with your degree, you might want to do an honors outside of Namibia. You must make sure that it is recognized. it's recognized. Some universities take students, especially those ones in China. They take you to do, or some of them in China, take you with 12 points in grade 12 to do medicine. That can't be right. That can't be right. So when you come back, then you find out that that institution is not recognized here in Namibia, and then you are a doctor, but you cannot work. But anyway, so in order for you to have this bursary exemption, it should have been at a recognized educational or research institution. Now, guys, in Namibia, we have NCRST, which is a research institution. So it doesn't always have to be at a university. It can also be a research institute. If I get to and I'm registered at the NCRST here in Namibia, then obviously the full amount will be exempted. But the rule, there are differences if the is to an employee or a non-employee. Now let's look at those rules. Now, guys, if the bursary is to a non-employee, obviously the full amount will be exempted for businesses. And then, guys, if it's to an employee, then it will only be exempted if the employee, so EE is employee, ER is employer, so it will be exempted will if he failed. So guys, basically how it works is if I get a bursary from my employer in South Africa, they should include a condition in my contract to say, if Mr. Jansen fail, then you need to pay back this bursary. Only then may exact amount. If clause is not there, remember some employers are very generous. They might not say that. They might not say that if I fail, I need to pay back or something like that. So if that condition is not met, then the bursary amount will not be exempted. Let me put it in scenario. If my employer say they give me 50,000 rand to study and the contract is silent whether I should pay it back or not, then basically I will have to include the 50,000 in gross income and I will have no exemption. Why not? Because this part is not in my contract. They should include it. Now, guys, I think this is just to protect SARS. Otherwise, every year you will just have this bursary exemption with no consequences. And the idea is for you to study and to complete contrary to what is currently happening with you in cost and management accounting. Then, guys, there are even rules when it comes to bursaries for relatives. Yeah? There are even rules in South Africa. So guys, if let's say I'm working at this company and my employer give a bursary to my child, my child would be a relative of me, then the full bursary amount will be exempted if my salary is less than 600,000 per annum. Now, obviously, if my salary is more than 600,000 per annum, then the bursary will not be exempt, because the argument is, no, then you earn enough and you could have actually given that, you could have supported that child of you. But if I earn less than 600,000, my employer gives my child a bursary. Remember, guys, when we dealt with services rendered, we said for relatives, I am supposed to include those amounts in my gross, because I'm a connected party. Yes, Silas?
So
Yes.
in that case, you are referring to a child, let's say when it's younger, because it can be a scenario also, let's say a parent, let's say is 59 years old working, right? And then earning maybe a salary of 500,000, and then the child who was previously working and then went out, let's say study in SA for a master's degree or doctorate. Of course, you have to leave the full-time job, for instance. How about in this scenario?
All right, thank you, Silas. So that's a very good question. When we talk about relatives, and I like the fact that you mentioned that relatives is not just minors. Relatives can be my mom, and you will see there's a lot in South Africa because I'm working employer, let's say now fit, on you know, she's 57 years old, 56 years old, but she decided to study now, then she's a relative. She's a relative to me. So what I'm trying to tell you is, I think that is your question, that what if the person is not a minor? Then I still need to include it in my gross income because I need to include it for relatives. Yeah, guys, even adoptive children is also regarded relatives. Yes, Silas?
No, what I was saying is this,
Are you happy?
no, what I was saying is this, a child itself, it's not a person who, it's not an elder who went to go study. Elder is 756, and then he has a child, maybe a child is 30, and then he went out to go, he was also working, and then he went out, let's say, to SA to go study his doctorate degree. For example, of course, he had to leave the full-time job. In that case now, and then he get a bursary maybe in SA to go study, maybe from his employer or whatever. Yeah, the scenario now.
Oh.
And then let's say an elder is getting 500,000. I mean, the parent who's 56 years old is getting necessarily below 600,000. Will that amount still be treated as such for the bursary?
All right.
For the child.
All right. So thank class. I get your question. However, I need to tell you that a child, a biological child or adoptive child, there's a further condition when it comes to those, and that is in your prescribed textbook, that the person should not be older than 26 years, all right? So if, like you said, the person is 30 years, yes, but it's still my child, then we are seen as two separate people. But just to bring you back to this whole bursary thing, and my employer now give that child the bursary, guys, that is actually disregarded. The issue is, if I'm earning less than 600,000, the full amount that is given to that child, irrespective of age or whatever, that amount will be exempted. But if my salary is more than 600,000, once again, doesn't matter what age the person is, he remain my relative, then I cannot exempt any of those amounts. I repeat, so since this person is a relative of me, if my salary is more than 600,000 exemption, it's less than 600. Excuse me. Yes,
So could you please just re-explain then up to 20,000 over 60,000 will be exempted. That part, the issue of maintenance.
Yes, we still getting there. No? We still need to get there.
Oh,
All right. Okay. So thank you. I just needed you to understand that if a relative get a bursary, then and my salary is less than 600,000, then you know the bursary will be exempted. However, guys, and that is what I'm talking to now, Denver. However, there's also a limitation between 20 and 60,000. So there's once again a threshold. So minimum amount that I will be exempted on is 20,000, and the maximum is actually 60,000 per annum that I will have as an exemption. So basically what it means is if my employer gave you 100K, né? I will actually only, and all the conditions is met, I will actually only be allowed to deduct 60,000. So the 40,000 will not be exempted. So there is still this threshold. Then the 20,000, guys, if it's less than 20,000, of course, then the full amount will just be exempted because, and they don't even give due consideration for amounts less than 20,000. But you can just check, guys, there's a sliding scale that also show that, let's say I'm earning 100, between 100 and 200,000, then I will be allowed 20,000. If I earn, let's say, between 200 and 300,000, but that is in your prescribed textbook, then I will be allowed 30,000. So it also goes up to, you know, 60,000. Let's say, I think the last bracket is if you earn between 500 and 600,000, then you will be allowed to deduct 60,000. Is that okay, Denver?
yes, sir.
All right, let's go to the next one, fringe benefits and allowances. So guys, the first question that we need to ask is, what is a fringe benefit or an allowance. Now, guys, fringe benefits are payments to an employee, usually in the form other than cash. Now, remember when we dealt with the definition of gross income, we said total amount in cash or otherwise. And otherwise does not always have to be cash. However, we also said in terms of, one of our court cases, if there is an ascertainable amount, if we can actually determine the amount, then it should be included in gross income. Now, guys, examples of fringe benefits is the use of a company entertainment benefits. When I advise, or people that changes jobs, I always ask them, what are your fringe benefits? Because, guys, there are really some companies that have really, really nice benefits. And then sometimes, yes, your salary might be much lower, but these fringe benefits just make it worth actually work at a place. On a laptop allowance of 600 Namibian dollars per month. Now, guys, I didn't buy a laptop allowance, and that one was now cash, but it was actually also an allowance. But let me give you an example. At Telecom, I have people that are friends that I know that work at Telecom, and I know that they, for instance, get a 4G, maybe it's even 5G now, device, and then they even get, let's say, guys, I'm just making examples, let's say 50 gig per month for free. Remember, Telecom is a data provider and all of that. So you see, that's not money, that's not physical money, but there's a value, because what do people outside pay? Maybe 60 the amount is, but they get this device. And what do people pay for that device? Us, we might have to pay 1,000. Do you get what I'm saying here? So those are fringe benefits because you are working there. Another example that I can give you is with trip travel. I also know people that used to work there. Remember, our tourism sector is basically destroyed at the moment. But before COVID, those people that worked there, I know that they used to get, because they are working there, the employees, they usually had a trip. Yeah, they could select any of the destinations that they arrange, for tourists. So they could choose any of those destinations, and they could have a holiday free of charge on the company's, account. And that is also one of the fringe benefits. So you don't get physical money, but you could go, because it's a group of lodges. Even Gondwana, the Gondwana lodges, the employees can go to any of those lodges, let's say for a week or whatever. You guys, obviously, that is not you getting money, but you get the right to use the facilities. Another example that I can give you is at multi-choice, DSTV. I'm not sure, guys, all of the stuff that I'm telling you now, it might have changed since COVID came. So these things happened before COVID. I knew people that work there, guys, they believe so much in fitness and mental health. So basically every morning when the employees came to work, they had what they call a workout session where they watch some programs on DSTV and exercise as a team together. They would just exercise. And then even the staff canteen, if you've been to multi-choice, you would have seen that there's a little shop there at the bottom, as you enter, that sell food and all of these things. Now they also have the to eat, let's say, 1 meal per day, and that's not money, it's food, isn't it? That was some of the benefits. Guys, there are really great benefits out there. So if you get an employment contract, you must also check for the fringe benefits. Then another fringe benefit that I can think of that people also, normally with these MTCs and those places, really, guys, sometimes they have really, really nice fringe benefits for employees. And what I'm trying to say is we need to include that in our gross income. You using a car, yeah? Imagine, I'm just using the word vehicle, but I have to include an amount in my gross income because we say there's a value. If someone else used that vehicle, they might have to pay, 200 a day or whatever the case might be. And guys, there is no other motor vehicle that can make a donut the way that a company car can do it. And that is why a lot of companies have moved away from giving employees the use of the car because you never told your car, you never make a donut with your car, but now that it's not your car, now you want to make a spin and a donut. So a lot of companies have moved away from the use of a company car. Instead, they now give you travel allowance. Now, guys, travel allowance is a very common one. Even me, and when I say this with, just to give you a background, even us or me personally at NUST, I get a travel allowance. And I'm taxed on it. So that is one of my fringe benefits because NUST doesn't give us the use of company. But anyway, so let's ignore the travel allowance for now. I just wanted to give you some of these examples. Guys, maybe let's say it's an artist. Let's say you work for Omalaiti Productions, which is a producing company in Namibia. They register artists and all of this. And let's say you also sing on the side and now your employer tell you, listen here, you can record your song here for free. That is a fringe benefit. Why is it? And you need to include it in tax. You will pay tax on it, even though you didn't get any money. Now, the question is, why should I do that? Because you only got that benefit because you are actually an employee of that company. There's a causal relationship, an employee-employer relationship that actually exists there. So what is the effect for the employer? Generally, there's no difference to the employer because whether the employer pay you a cash salary of 200,000 per annum, or whether you choose to rather receive a salary of 150,000 and a travel allowance of 50,000, the employer will still be entitled to a Section 11A deduction of 200,000 for salary costs. Guys, in financial accounting under salaries for the company, we say salaries is deductible the same way for tax. The salary is deductible. So guys, for the employer, we say the full 200,000 will be a deduction. Let's look at the employee. What is for employees? Gross income. Paragraph C and I determine how to calculate the value of the amount to be included. Because guys, the example that I just gave you for Omalaiti Productions, sometimes there might be gray areas in terms of what should the value be, and it might even be subjective, and that is why the courts come in and they give you guidance as to how to calculate the amounts, how to and what to include at the end of the day. Now, guys, these are some of the fringe benefits that we need to look at. So certain allowances, including cash, which is Section 8.1. Then fringe benefits other than cash, which is paragraph I in the gross income definition, and then services rendered, which we know is paragraph C. So these three is the bulk of what makes up fringe benefits. So Section 8.1, Section 1I, and Section 9C. These are the ones that we will be looking at. Now let's look at Section 8.1 that deals with allowances. Allowances or advances, they are treated the same way. Now, firstly, you need to include it in taxable income. So you need to include it in the taxable income of the recipient. And that would be any amount which is paid or granted by the employer as an allowance. And then obviously, guys, firstly, you include in gross income. Let's see, now you have a deduction available. So you exclude any portion actually expended for travel allowances, subsistence allowances, and other allowances received by virtue of the employee's duties. Now, guys, We will discuss this in detail because it is not as simple as that. But guys, basically what we say is if you get an amount from your employer as an allowance, you need to include it in gross income. Now we say if it's one of these, you might have a deduction. There might be a little X that you can deduct for tax purposes. And remember, the deduction is actually relief that you get from the government. Now let's look at the reimbursive allowances. Now guys, a reimbursive allowance might be that my employer tell me, listen here, you need to go to Oshakati, but listen, please pay the bill or wherever you're going to stay, I'm going to reimburse you. Now reimburse means to pay back, isn't it? So section 81A say that you need to exclude reimbursive allowances from taxable income. Guys, why is that the case? Because I didn't get money. It's me paying, then I'm getting the money back from my employer. Yes, Silas?
The reimbursement allowance is a form of like a counter guarantee. I mean,
A form, can you just repeat that?
in form of a guarantee, because actually now
A guarantee.
an employer.
What do you mean with a guarantee?
Because now an employer will have an obligation, right? Like let's say once the employee leaves for Shakati and then settle those amounts. When it's coming to, of course, it will be an obligation to pay back, isn't
it? Yes. So if you want to look at it in that, that's an interesting way to look at it. Yes, it basically comes down to loan. Remember, we've discussed a loan a few weeks ago when we said that if I actually borrow someone money and I get my money back, or the money that they repay, or even the money that I repay to the bank, that is not included in gross income. So guys, look at reimbursable allowances in that way. I have paid for the hotel bill and my employer owe me that money. So my employer just give back my money. Obviously, if there's a difference, if I paid 1,000 and my employer give me 1,200, then the 200 should be included in gross income. So don't lose track of that one. But generally, if I've paid and my employer have to pay me back, that is why they say it should be excluded from taxable income. So exclude from taxable income any reimbursements or advancements paid to an employee by an employer where the employer has instructed the employee to incur the expenditure, and the employee must account for the expenditure and provide proof to the employer. So you need to bring your fuel receipts and all of that. Or let's say in marketing, let me tell you about marketing. People that work in marketing, sometimes they will dine their clients, let's say at Hilton Hotel, and then they pay that bill for the food and all of that. Then the company will reimburse. Guys, some companies, in 2016, when my colleague and I went to UJ for collaboration for our CA program and, with NUST, then one evening, those people took us out and they basically told us that we can order the most expensive wine on the list and even the most expensive food. And I was wondering, why are these people so, because to me, it sounded like they were just bragging now. But then I realized from a tax perspective, so the guy told us later that we got the credit card of the department, and their boss felt bad because he could not go out with us, and he said, please let the people order anything they want. The company UJ will pay for that. So you see, and basically they just swipe. Now it's not the same, but it actually comes down to a reimbursement. If they now paid and they took those receipts back to UJ, then UJ would have paid and nobody would have paid tax on that. Now the flip side of it is we actually didn't order expensive wine because I don't drink wine. I don't drink alcohol. Okay, now guys, we will look at travel allowance when we meet on Monday. Guys, we are actually now a little bit behind because I don't know what we did today. There's still a few slides that I will discuss with you on Monday. You can already start with that tutorial. Look at what have we covered so far already, and then you can actually start doing it. We will finish these slides on Monday, and then we will do that tutorial, after which you will be ready for your test 2, which will cover all the work from the beginning of the semester, but special emphasis on the work that we've covered after test 1. Guys, if you want the scope for the test, even the exam, we will ask you an individual, so you will need that framework, and we will obviously integrate everything that we have studied from the beginning of the semester up to, the test. Now, guys, that is the end of our lecture for today.